Hello everyone, it's Mike Wise, CMG Home Loans, and in today's market update, we are going to be talking about ADP, the latest jobs, and why small business layoffs, they're going to push the Fed towards another rate cut. And what does that mean for mortgage rates heading back down towards that 6% level? We're also going to look at the pending home sales, 2026 housing forecast, and the continued drop in national rents. All of this points to improving affordability and real momentum returning to the market. So let's jump in and see what we have going on here. All right, so what we're going to talk about first is ADP. So ADP came out. This is kind of the jobs report that we have to be looking at because we're not getting the regular reports from the Fed because of the shutdown. We'll get those after the Federal Reserve board meeting next week. So basically, ADP came in. They showed there was going to be a little bit of a gain is what they were expecting as far as the jobs numbers are concerned, but it came out and they were at a loss of 32,000 jobs for the month of November. Now, that marks 4 out of the last 6 months that we've seen a drop off in the job or negative numbers in the jobs report from ADP. And you can see with this graph here that there is a real trend moving down with less jobs. Now, the other thing that's happened here is the Challenger jobs, the Challenger report, which is basically employers announcing the layoffs. They have to announce these layoffs within a certain amount of time. And this is at the highest level since 1993 if you take out the COVID timeframe. But basically, this is not good news for kind of the future of the jobs. And this is really driving the Fed and really the drop in the Fed funds rate that they're going to have to do, even though inflation is still up at the 2.8% range. But in fact, let me go down to a couple other things here for ADP. So it's worse than it looks, and it's fourth in the 6 months of the 3-month average is kind of gone negative here. 6 of the 10 sectors of the ADP report, they reported the losses. So you saw losses in professional business services, IT, manufacturing, and the only ones that showed growth were the health, education, health services, and leisure and hospitality. So, the end of the day, the company size, so the smaller employers were really driving this market, and they are the ones that really see the impact of the tariffs, of any of the challenges that are coming. They move first. So if there's increases in costs, they're moving first and shedding the jobs very quickly. And so that was they're the lifeblood. They're 43% of the total private employment, and they're the lifeblood of this economy. So you can see by this report here that the huge drop off in November in regards to those numbers. So that's where you start to see the BLS is a little bit behind the scenes here, and we're starting to see some softness in the labor market. So going back up here to the pending home sales, October pending home sales were encouraging. They were up 1.9% month over month in October, and basically it's showing November was gonna be pretty strong as well. They could hit $4.2 million or 4.2 million units there for sale. So the longer interest rates are moving towards that 6% level or just below 6% level, I think that you're going to really start to see some movement in the market. In fact, Realtor.com, they're pretty boring. They actually think that the mortgage rates are going to be at 6.3%. That's where they are today. So they don't expect 2026 for mortgage rates to go down at all, which basically is saying that the home sales are going to stay the same. And they have a very modest home increase of 2.2% year over year for that particular month, or for this year, this coming year. But they do see inventory going up almost 9% on the year over year number there. So Now, if you look at the National Association of Realtors, they are expecting a 14% growth in existing home sales with a 4% appreciation in the prices. Now, they think that this is all driven by the mortgage rates, and they feel like the mortgage rates are going to come down a little bit. So this is going to drive their forecast for 2026. So we got a little bit of a competition there, a little bit of difference between National Association of Realtors and so National Association of Realtors as well. So a little bit of a difference there. Now, rental rates, they're dropping down. This is good news for inflation because that drives the inflation numbers. Now, inflation came out this morning. It was pretty tame. It came in as expected, so there's not much really there. This is giving room for the Fed to lower the Fed funds rate. So there's basically a 90% chance that they're going to drop the Fed funds rate another 0.25% next week. So while that doesn't drive mortgage rates specifically, this news of the inflation coming out has really spurred the stock market. The stock market is rallying at this point in time today, and that's all because the inflation is in check, and their feeling is the Fed is going to lower the Fed funds rate, which is going to drive business for 2026, and that's all good news for the economy. So at the end of the day, this is all good news towards with the interest rates possibly going down a little bit further and getting down to that 6% level. They're right at 6.3% on the 30-year fixed rate loan, depending on your credit scores and how much down payment you have. A lot of factors that go into that. So anyways, that is the update. I hope you have a great weekend, and we look forward to seeing you next week. Have a good time at your open houses, and if you have any questions, I will be available to answer them this weekend. Just call me, text me, whatever's the best way for you to get in touch with me. Anyways, hope you have a great weekend, and we'll see you next week.